This then creates a very quick jump straight offside in the S&P. The 5-year comes back, has to cut and reverse really, really quickly. He's already seeing the market rip back against him. So he knows that he's not in an optimal place to be really adding on to this. This time the leverage is there. 800 lots into the 5-year straight away, 100 lot into the S&P straight away. What we've got then, no position in any markets. This was the first comment from the Fed where Powell says that inflation is too high. So the trade here then is to sell the S&P and sell the 5-year. And the important thing to watch on this is to see how the leverage changes with the scale of opportunity. So this is the first one. This is reasonably big deal, but ultimately there could be more to come on this. It doesn't actually tell you clearly anything, but nevertheless, short S&P 40 contracts, short 5-year bonds, nearly 400 contracts. But that was the first bit of the trade. Very quick into the trade, builds the size up very quickly. It's not the biggest comment, and remember, you're midway through a press conference, so there's more questions that are likely to come up along the way here, and that's why he's then just starting to edge out of the trade. We're onside off the screen on both markets, I believe. S&P perhaps not has come back now. No, there you go. Just about onside on that trade. T-note, you can see onside as well. So the move's gone, but bearing in mind, like I said, people are still waiting for additional information here. So once he's onside, he's then just trying to scale this out, just edging out of the trade. As the move goes, knowing that there's going to be more to this, there are going to be more and more questions. But what he has managed to do is turn minus 35,000 down into around about 10,000 up on this trade just at this point in time. And you see, quite significantly reduced in size. Has a go, increases size in the 5-year. This is a classic of his style of trade, to try and add size to play for the break of the low. So that's the kind of the play here. You add size, you go for the break of the low, looking for a continuation. And this then has really sort of turned around his performance on the day, very much so. The S&P is still struggling to really get notably on side. The 5-years holding much more solidly towards the lows. So he's in a good position here. And you're going to be reasonably happy with this. The objective now, you can see he's got levels marked out on his ladders. So he's going to be looking at that. You've got a very large order in the 5-year as well, which is going to be something that equally is going to be drawing attention. What you saw there is, the S&P's jumped back to a scratch. This is where the next comments come out. Now, he knows as the question's going through what the potential answers to this. Right, next bit of the trade. We've just now had the comment that 50 basis points on the tail for the next couple of meetings. What this basically means is that is it. They're going to do 50. They're not going to do 75. It's a soft way of saying it. So this then creates a very quick jump straight offside in the S&P. The 5-year comes back, has to cut and reverse really, really quickly. Now, the difficulty and the reason for the less size here is that he's cutting and reversing. He's not using hotkeys. Watch the cursor. The cursor moves around, the black cursor that is. I've got the yellow cursor. This is the black one. So no, you see constantly moving the cursor across the ladders. It's just that, it's a case of practice. He is very, very fast at it. But it is just practice. And the reason that the size didn't go straight in here is he's already seeing the market rip back against him. So he knows that he's not in an optimal place to be really adding on to this. So size goes in smaller, and then he starts to try and add on to now. So it's a much more steady type trade in the sense of the size going in. We're not up to, say, 300s in the 5-year. You're not over 100 in the S&P. The S&P's really kind of chopped him up here. This is then one where really what he's trying to do is sort of consolidate what he had. He was up around about 40,000 before this comment. It took a lot of that away with the jump back. So now it's just a case of just trying to consolidate this, pull this one back a little bit, because ultimately he's not got the optimal entry points on this trade at all. But there you go, starting to then build the size up a little bit. Well, he's built it up. He then starts to reduce this one back down. You see the S&P's 5, and we never really got over about 50 on the S&P, never got over 200, because this is an opportunity. Yes, it could be big, but it was a turnaround on his current position, which is much harder to then turn around. He's now out of that position. And this is really important here. Look where the cursor is. The reason for this is the question being asked. He's listening to the question that's being asked. He's thinking, I know where this could be going. And the question is along the lines of, is there a possibility you could do more at the coming meetings? I.e., would you do more than 50 if needed? That's essentially the question. And the answer to which is no, 75 is not on the cards. This time the leverage is there. 800 lots into the 5-year straight away, 100 lot into the S&P straight away. This is what I mean about this is the big chance. And so he's not then going, oh, a little bit, the same as what we did before. It's big, straight in on it. No waiting around for this one. And you see then the S&P drives through the high. It keeps on pushing and pushing and pushing. And this is where you make the big money. It's about recognizing the scale of this opportunity. And yeah, it's uncomfortable. It has come back to him a bit. It's not flying on side, but you know that this is a big deal. And the fact that he knows this is a big deal is what's now keeping him in the trade. That's what's allowing him to then go, right, there is more to be had on this. You can hold on to it. Yeah, he scales out when the market doesn't continue to rush up. Yeah, the way that he will always approach it is you go really big straight off so that if it does run instantly, you've got everything in. And this, somebody asked about, when do you go really big and don't scale in? This was the time. But when it doesn't run straight away, it's then a case of, right, scale something down. He's now getting out in 20s here. He's getting out in 2s in the S&P. Scale it down a little bit until you get some more clarification, either from the question or from the way the market trades. If the market starts to run faster and faster to the upside, if you start taking out these large orders, you can see in the S&P, someone's iceberg in the S&P there. If you can get through that, then you know that the next leg's on. There you go. The S&P jumps through it and the next leg's on. Back up to 500, back up to 100 in the S&P. The size goes straight back up as the move continues. That's what I mean about leveraging a trade up. It's about varying your size. It's about, in some cases, recognizing this is big. You go for it all out. In other cases, you have to sort of get in, and then he's really added when the market changed. As soon as you got through that large order of 500 in the S&P, that was when he goes for it. Adds very, very rapidly another 100 into the S&P. And then the 5-year, again, straight up to 500. That's the key to leverage. That's what really brings you the big performance. And you see it there, the P&L, he was hanging around the 30,000 mark up going into this final comment. That comment comes out, he's now up to 250,000 and continuing onwards. He's 200 lots in on the trade. In the T-note, 50 lots in on the S&P, starting to scale down now.